All right, welcome to Falcon Forward. My name is Peter Brecht. I'm here with our president, Mike Tangy. It is Tuesday, so we're back on a somewhat normal schedule here. And see, June 2nd, so we're in June already. Can't believe it. Can't
Yeah,
believe that we've 5 months of recording under our belt, Mike. It feels pretty good, and we've
yeah,
been making some changes and kind of learning about things. But I don't know. I personally I find a lot of value just talking about this stuff, and I come with a notepad and a pen ready to take notes myself and kind of hopefully add value where I can. But exciting week for us here at Falcon West. We kicked off Academy Group 6. So we have 4 rugby athletes that joined us. We had our onboarding yesterday with Myra, and I don't know, just really looking forward to this group. They seem very eager and excited to engage. So
yeah,
ready for that. What's new on your side?
yeah. I share your excitement with this new academy group coming in. Just the energy, the new ideas, the varying backgrounds and perspectives that each of these academy participants brings is helpful to us all. It was great to see Michaela jump in on one of our weekly meetings yesterday,
Yeah.
which were fantastic. And again, if those that kind of seek out more from this, um, are will get the most out of it. But for us, we've met some great people. We, have several that are working with us on an ongoing basis. So, ours industry, like most, is a relationship. And so when we get to start meeting new people and start making new relationships, that's great. Personally, my daughter started an internship yesterday, which I'm quite excited, quite proud for her. And she's working in Los Angeles. So she's doing this bigger kid
Dang.
stuff. One of my rugby friends, he and his wife were kind enough to agree to house our daughter during this internship, which solved a big problem that we were looking at.
Yeah.
And yeah, quite good there. And had another kid graduate high school last week. So a bunch of family in town for that. So it was a fantastic week of celebrating him. Just lots of family. And then tying it to the insurance front with our third kid, big driver's license test this Friday.
Yeah.
So
That's right.
we see how she fares, but she's definitely put in the time, the practice, and really developed as a great driver. So I'm confident that if she does all that she can do, she'll pass that with flying colors.
Do you know if they still do the parallel parking as part of the test? I was told this was, whatever, 20 something years ago that they didn't test for it. So I didn't practice for it. Then of course they had me do a parallel parking, and I'm good. I can parallel park, no problem. Like I
Yeah,
kind of enjoy it because it's fun to, I don't know, it's like a puzzle. Do
yeah, it
you know
is
if they still
exactly.
test for that? Yeah. Do they still
My
test for it, or?
understanding is they do not.
Okay. All right.
So yeah,
We'll find out if that's true or not. I'm not sure. I don't have much confidence in the DMV's stated rules.
yeah, exactly. My parallel parking, I didn't know it was a fail if you hit the post. And, I was like most people, seems like our current generation doesn't do this as much, but, the day I was eligible for my driver's test, I took it, which meant it was snowing in Minnesota
Hmm.
the day of my test. And I was in, we didn't have, great selection of cars to choose from. So it was my mom's Suburban that I took the
Yeah.
driver's test in. And thankfully, during the parallel parking, I mean, I was probably like 15 feet away from the curb.
Hmm.
And it was towards the end of the test. The instructor was kind enough to be like, listen, you have enough points like to pass. So let's just stop this right now.
Let's
The parallel,
forfeit.
keep going. You're doing fine. Keep going.
That's
Because
funny.
otherwise, I'm sure I would have bumped their post or whatever. And I
But
guess
yeah,
that is a fail. So
man,
I got taken care of my instructor on that one.
that's good. Yeah, it is about the instructor, which is equally important there. So, all right. Well, best of luck to her, and I'm sure she'll do great. So awesome. Well, it looks like you and I were both working on the Google Doc this morning as we were kind of prepping. Had
Yep.
similar thoughts on like subject material here. We have a 2026, second quarter market update for California business owners that we'll be publishing this week. Just really a high level on, what's going on with commercial insurance across, property and auto and all that. So we're working through that, but kind of sidestepping there, in a sense, moving into a soft market in a lot of areas nationally. We're in a softer market. I think, Marsh had put out a report beginning of the year that they were starting to see kind of indications of that, and it's coming true. So our hope today and what we want to discuss, because this would be effectively my first soft market in California. I was kind of brought into this when everything was getting hard, and then it became a very difficult kind of scenario. So I'm here to learn as much as anyone else, but what are some things, I guess, as brokers, as account managers, that we should be thinking about as we go into a softer market?
Yeah, and great question, Peter. And definitely it takes some thinking. So, and I guess first of all, use terms here: hard market, soft market. What's a soft market? What does that mean? And generally in the industry, it means that you're going to see lower premiums for the same exposures that you have. Underwriting standards, meaning what carriers will write, they get more relaxed. So they'll take on things that they wouldn't have a few years back. So you'll see carriers that in the past may have declined accounts are now saying, oh yeah, we want to write this industry or this type of account. And then also increase capacity. So sometimes, carriers were just a lot more selective in a hard market. So if they wrote one account and then you go to them the next week with the same type of account, same type of business, they'd be like, oh man, like we're limited on what we can write. We saw that on the home markets where carriers would say, we'll let you write 2 accounts a month. It didn't matter, it was just they had to control their capacity. So in a softer market, it's the end result is it becomes much more buyer friendly. So it's much more better. It's better for our clients in terms of they can get broader coverage, they can
Mhm.
get lower premiums, and it really has changed what the past several years have been. And for a broker, like, what does that mean? So in the past 2 years, if you renewed all your accounts, you probably saw an 8 to 10% increase in your pay, like what you got paid on it. This year, if you renew all your accounts, you're going to see a decrease in your incomes. It forces people to, and hopefully this isn't something, good brokers will do this regardless of the market. They'll be growing, but if you're someone who's been like, hey, the past few years have been good, I've, got an increase in my pay, good job, you know, you'll have to get out there and earn more opportunities to earn people's trust and write new business just to stay even.
As you're reviewing these accounts, like what are some of the things that we should be doing, I guess, and thinking through probably broad scope first, and then we could maybe get down into some of the specific tactics of that carrier broker relationship too.
Yeah. So definitely it requires a different strategy that just wasn't available. Like you couldn't do these things 2 or 3 years ago for your clients. So, okay, markets change. So we need to change and we need to adapt and we need to help our clients. And we need to recognize where we are in things. And I guess even just to back up like a little bit, the biggest is explaining to clients, like, we talked about what a soft market is, what it means to them, but why are we in a soft market? Like, what does, why were we in a hard market? Why are we in a soft market? And the soft market comes about because carriers are making money. So if you followed the news releases of carriers over the past last several quarters, they're all making record profits,
Mhm.
and so that means they have more money. They feel they have a good job, and they need to redeploy that money. Inflation has tamped down a bit, so claims that had been growing in it 3, 4, 5 years ago at larger amounts, that has slowed down. All this talk about AI and tech, carriers continue to invest in tech, and that helps create efficiencies, which lowers their overall cost of running. But the biggest factor in things would be the reinsurance cost, which is what insurance companies buy to effectively limit their exposure for any one claim. So reinsurance costs have dropped dramatically, and that's being driven by uh, stock market returns, investment returns, and all this outside capital that comes into the industry and says, hey, we like insurance. We want a piece of this insurance. How do we get to do this? It's through participating in reinsurance and gaining returns from that. So all those factors help drive that. Now carriers have said, okay, we're doing good. We need more volume. We need more business out there. And that's when they start softening the market by those things we talked about earlier of relaxing underwriting standards, lowering premiums, saying we want more business. We want to write in new industries. So that's where the cycle goes for the business. So for us as brokers, like to help our clients, we have to shift our mindset of, hey, we found you coverage that we talked about a few years ago with clients. Like, this is great. Like, you need to, make sure that you do all these things to make sure you keep your coverage. So now that narrative has switched to, yes, there's lots of coverage out there. How does a client utilize their premiums to make sure that they have the best. Because if you go to someone and say, "Hey, I saved you 20%," and they have an uncovered claim the next week, you failed as a broker. So you got to make sure that, hey, the market is now available where we have some options for you. So, client, let's talk through what you're doing as a business and what's available in the marketplace in ways that you can now get better coverage for your business. And there's a lot of different ways that we can jump into on how they do that. But
Hmm.
from a high level, that's what we should be talking about with clients is how is your company doing? And then sharing with them, here's what we're seeing in the marketplace, and here's our strategies on how we can help you. So,
I had this. This was a phone call yesterday. There's a small auto service dealership that I work with, and the conversation with the underwriter last year was like, we have two options on the table. Here's one option, and here's the other one that's twice the premium, right? Present both of them. Obviously, just based on coverage alone, it made sense to go with the lower one. It wasn't, the offer wasn't there, and everything was, they understood everything. This year, same conversation with the underwriter. Hey, we're going to do a full remarket on this account again, and here's why. There's 4 or 5 other carriers that are in the market who are wanting to take a look at this. Right, it's more boutique, higher end vehicles, that kind of thing. But they're like, hey, we want to actually talk about this. So I don't know. I think the value of the underwriter too is kind of knowing all these pieces too. But it's great to kind of hear that, and then it's like, okay, well, who else can I talk to? Who are my direct markets too? So
yeah,
interesting times. But that same conversation happened yesterday. So this is not just theoretical. This is all actually happening for everyone that's listening.
yeah, no, I mean, these are literally conversations we have with every commercial client out
Yeah.
there
Yep.
on it. So,
Yes.
in ways that they can, how can I upgrade coverage? There's a lot of different ways you can do it. So in the past few years, one of the levers that we turn when premiums are rising 20, 30% a year, which we did see for some clients, was, okay, how can you take on more risk? And through that is by raising your deductible on the low end, meaning I'm going to self-insure smaller claims. And then also on the high end, clients just saying, hey man, I can't afford this level of coverage. I'm going to cut this line of coverage, or I'm going to cut back on umbrella, or I'm going to hold my property, and almost play a little bit of a game with their property limits that they have on buildings and so forth. So we can use this time now that rates are dropping to how can we restore where you should have been? So whether it makes sense to lower your deductibles back down, um, and again, if you think of an insurance company, they like to do those types of levers first before just giving up on premium back to a client, because otherwise it's just going to make the cycle a bit shorter on things. So
Hmm.
lowering deductibles, pricing out different levels of deductibles, and figuring out, okay, hey, you have pretty good savings on your policy, so let's bring your deductible back down so you're not self-insuring a potential catastrophic loss with too big an amount. And then again, we talked a little bit about this before, but what's happened over the past several years on replacement costs? So if you're, rebuilding a building today versus what it costs 3, 4, 5 years ago,
Hmm.
significantly higher. A lot of our insureds pushed back on us when we said, "Hey, we need to bump up your property limits," as a matter of survival, in just allocating premiums in the way they wanted to. So there's some catching up that needs to be done to make sure that, hey, we're actually at replacement cost for 2026 costs on this. So again, using this effectively free premium as your rates have come down to restore those building values. So questions on that, or do those ones make sense?
No, that one I feel like I think we all feel it even going to the grocery store, right? So it's kind of, it's one of those things for sure we have to make adjustments on.
Yeah, exactly. Things cost more than they did several years ago. So we got to make sure that your insurance is proper for a catastrophic event. Other things that need to have happen is looking at limits. So in the past few years, if you're faced with a large increase in your premiums, you weren't necessarily budgeting, hey, I should increase my umbrella limits or I should add this line of coverage. So again, as rates have dropped, let's use this time now to better your programs, whether that's just having higher liability limits. Again, that same inflationary things that impact the grocery store and everything else, building costs also impacts what juries have awarded in terms of liability claims. So
Hmm.
again, ensuring that top end, making sure that if you're the unlucky business that's involved in a very messy claim, that you have the right liability limits to protect that. So bump up those umbrella limits. Again, it's gotten cheaper to do so, so go ahead and do that. The other big piece too is, again, clients weren't receptive to adding new lines of coverage when they were faced with these larger premium increases that just weren't budgeted for. So now's the time to look at things like you got to make sure you have good cyber insurance. I mean, it's no longer an optional item for businesses. It's not mandated typically by clients. Some industries it is, but for the majority of our clients, it's not mandated. But absolutely, it's critical. I almost think more critical than like look at fire insurance. How many businesses do you know that have their buildings have burnt down versus how many do you know have had some sort of cyber related event?
It's yeah,
Disproportionately higher.
yeah.
People have ingrained in our minds we must have fire insurance, and you do. But people haven't quite got to the point of I must have cyber insurance, and we absolutely feel
Hmm.
you have. So if you don't have it, now's a great time to add that line of coverage on it. And then other coverages like earthquake. We were meeting with a client the other day that has a large property exposure, and they were getting hit hard in the past few years with property increases. And they recognize that their earthquake program isn't as robust as it should be. So we're now taking that opportunity as their property rates, again, very property heavy account, are dropping. Now they can build out and expand their earthquake coverage, which is something that they knew they were underinsured, but it just
Hmm.
became a matter of cost versus having that relief. And they budgeted now for a 5% or so increase like most clients do every year with their insurance portfolio, and so we can now allocate those premiums to cover this earthquake risk, which is significant for them. So
Yeah, yeah. Interesting. That's something I wouldn't have thought about is like, planning ahead on it and kind of being proactive there. That's super smart.
yeah. And the other big piece too, we mentioned underwriters not necessarily want to just lower premiums on stuff, but what things do they do when the market's hardening is they'll put in sublimits or they'll put in exclusions
Hmm.
on stuff. And now's a great time to negotiate those types of things off an account. And again, giving your client that more robust coverage. So lots of little levers that we turn when things are going up. And we need to also make sure we're turning those same levers when things are going down so that at the end of the day, the client has the very best insurance that makes sense for their company. So,
As a broker, exciting for me because I'm like, okay, if there's more options, that means I have more leverage potentially between quotes and I can actually talk to my underwriters and have real meaningful conversations where before it was like, no, we're not interested, doors closed, don't bring this risk to us for a while. And now it's like, oh man, I can resubmit something and you might say yes again. It's kind of fun.
you're 100% right with that. And that goes, kind of up and down the insurance supply chain. So if you have business that's in the E&S market right now,
Hmm.
it is typically more restrictive for the client, less flexible, and at the end of the day pays us less commissions. Start going to your standard markets now and say, hey, this is a really clean account. Here's what they're doing. Here's where the risk is. Here's where their claims are. Here's where their premiums are. If you get out far ahead of those and talk to a seasoned underwriter who knows what they're doing and is looking for the very best accounts, you can get those E&S accounts now in the standard market and
Hmm.
better for the client, much better coverage, much broader coverage, less restrictive coverage. And then guess what? Also pays us 50% more on commission. So to me, that
Right.
is an absolute win. And the other great benefit of standard markets over E&S is that direct connection with underwriters. When we can talk directly to the underwriter versus having to
Hmm.
go through a wholesale broker,
Yeah.
much better for us from an efficiency standpoint, and in my opinion, better for our clients as well. So you're absolutely right that what can we do on the carrier side? And how does that happen? It's through good communication, it's good
Hmm.
knowledge with your client, good documentation, good submissions on it. So, and then actually, I'll pause there.
Yeah. No, I had a comment real quick, and this is just because I'm we have two brokers that are relatively new with the company, and we
Yep,
spend a lot of time writing out the client narratives, right? So and it's a kind of a two-part exercise for us. One is, first of all, I want them to understand and know the account, right? So that document, you could write one paragraph on a company, great, but that ends up being 2 pages. And as crazy as that sounds, we're pulling a lot from all of our phone calls. We're looking at current
yep,
policies. We're looking at everything we can find, kind of doing this like pre-underwriting, right? We're doing the
Yeah.
field underwriting part of it. But the other part of it too is that having that understanding of an account, like a new account, even somebody that's first time, hey, Falcon West would love to talk to you guys, take, help us do the marketing. We can actually take it to the right carriers too. And right now, those narratives are so helpful and important because it's actually those truly have been an unlock for us in so many ways. So
Yeah.
understanding that account up front. And so that kind of goes back to what you're saying there with like, can you have that conversation? Well, a lot of it comes with how much do you know about the account personally and how much could you walk into that company today and almost be like, hey, I know exactly what you guys are doing, how it's operating, look around the room, know who everyone is. Like you almost need to be that person right now to be really, really effective for your client as a broker.
Yeah, if you wanna keep clients for the long term, you have to, and I've had clients, large complex clients that, when they have turnover in their ranks on it, and, it's pretty powerful when you can talk to the CFO of a company and tell them, here's what you have going on in your company, things that they should typically know, but just because 'cause they're new and they don't, and if you have this institutional knowledge of, "We did this because 5 years ago you entered into this contract and this person required it," and, just try to rattle, I mean, talk about confidence building in that new person,
Hmm.
in your skills and expertise. But you're absolutely right. You have to want to. You have to have that curiosity to, how did you guys get started? Why are you doing this?
Yeah.
How are you doing this? And really dig in. And to me, that's one of the greatest things of this job because,
It's
where else can you get someone's ear and ask all these questions and then come to them with recommendations about how they keep their business going?
yeah.
Pretty cool when you can have that level of insight in a business.
I agree. Like that's probably one of the reasons why like I even started the other podcast because I just wanted to talk to people and like learn what they did. And I'm like, what? That's just what I do in my day job. Like it's really
Yeah.
no different. I'm just on a microphone and someone else said yes to come talk. So
Yeah.
so yeah, it is a lot of fun. So not to digress there, but wanted to just make that comment for I know Devin and Maceo might pick this up and listen to it. And there's the reason why.
Yeah, and there's a couple other things just to kinda close out what we can do with carriers, on it is go out and get quotes. If we're just saying, "Hey, we got 10% renewal from your incumbent and no changes to your program," like, to me, that's a failure,
Hmm.
if we're doing that. So go out and get other quotes, see what other carriers are offering. You can use that for leverage with the incumbent carrier, and again, use it to build out all those things we talked about. The other thing, that doesn't necessarily come to a lot of people's mind, first off, but, it's carriers are interested in doing it. It's good for your clients. It's good for us is ask about locking in multi-year deals, 2 years or 3-year deals. So markets change, cycles change. We won't be in a soft market forever, but it's a way to, again, help protect your client, help lock in certainty, which is great. Everyone likes that. And it's a way to just, again, kind of limit the amount of work that we have to do year in and out. So
Hmm.
it could be one of those win-win-wins is getting that multi-year deal. So
Smart. Yeah, I didn't think about that. I haven't seen too many people wanting to lock in 2 years of their increase, but now you can. It makes sense to go on the
exactly.
other on the other end. It makes sense.
Exactly, and again, it's a way then that carriers like that too, and underwriter can be like, "Wow," they'll dig in a little bit deeper and realize, because 'cause I'm doing this, I'm gonna put the work in, and I'm knowing that this work is gonna last for 2 years, 3 years, Underwriters
Hmm.
have interesting jobs. They basically are on a one-year renewal. We are to some degree, but obviously having that direct client relationship, we have a much higher retention ratio than, the actual insurance companies. So if you can say, "Hey, we wanna get this on a 2-year or 3-year opportunity," what's a smart underwriter going to do is, hey, let's make sure we get this dialed in and get this one done, and really work hard to win that account. So it's can be a great way for our clients. So
And the best way to an underwriter's heart is through a flawless application.
percent. Again, just getting to that good communication. If you can clearly communicate, here's why you want to write this account or underwriter. And I always tell people, picture this as if you were the one reading it. If you were the underwriter, what information would you want to know to write that account?
Hmm.
And include that and include it in a, easy to read narrative that gives all that detail. An underwriter gets a much better picture on an account than just going to a website or scrolling through, those endless pages of Accord apps that, 100 pages have
Yeah.
5 pages of information on them. Yeah, 100% do that. Spend the time to do that narrative and put together that application that has everything in there up front, and you're going to be a heck of a lot more successful.
100%. All right. Let's see here. We are, the broker mentality. Like What's the mindset shift that we should be having? Because again, we do have to kind of think about how we do our job, and that does change according to what's available in the market.
Yeah. And again, if you think about if you, from a client perspective, if they every year get their renewal and it's like, hey, I don't know, is this going to be down 10%, up 20%? Like, I don't know. It's a mystery. I'm going to open up the envelope and, I'm either going to be
Hmm.
stressed or, heartburn, or I'm going to breathe a sigh of relief. Like, that's the wrong renewal. Like, these should be ongoing conversations through the course of a year, telling clients, hey, whether it's good news or bad news, no one likes to be surprised either way. Um, Communicate to them. And now actually we get to communicate good news to clients as far as where we are in the cycle. So it shouldn't
Hmm.
be a surprise to a client when you finally present that renewal. They should know long in advance of what to expect. You're just filling in the exact details on it. So and so again, that gets down to this. If you're not explaining that macroeconomic cycle of why we're in a soft market to a client, they're just going to think, wow, I've been paying too much over the past few years. No, you haven't been paying too much. You've been paying what the market has allowed for you, which was a lot higher. But if you're not doing that level of explanation with the client, they're just going to think, man, I don't get insurance. One year it goes from this. No one ever explains it to me. I have no reason. To me, again, that's a broker fail. You're not going to have that same level of success of those who take the time to educate their clients on it. And again, just like underwriter communication, you got to have good client communication.
Yeah, and we had this exact thing yesterday. We asked during the orientation, asked the academy, I'm like, hey, when do you think we should start having those conversations? And the average answer was, 30 days out. And they were kind of surprised to hear that, we would talk to people even 120 days out about their renewal. And really, I put that number out there because it's kind of in between, right? Like we finished binding. Okay, great. A couple months go by. We're going to get through some things together, COIs, all the other MSA reviews that need to be done. But 120 days out is kind of where we start talking about renewal, just so that we can have a game plan. Because by the time you get to 60 days out and you can start having those carrier discussions, or 30 days out when you start getting quotes back, which is kind of the average timeline, we want to be well prepared for it. And it's 60 days of us being able to kind of feel it out and see where they're at. How can we help, make this better? And things change so much during the course of a year for any business. Like it's and typically we know about it, but I guess one thing I'll interject here is that so we have that narrative that we write. And I really use that as like my notebook with the client throughout the year. So if I have a conversation with them, I'll put notes in the narrative, and then next year we just go in and update it. And so I don't know if there's any other brokers listening, you can steal that, but it's been really helpful for us. Just kind of having like that one sheet for me at least to kind of keep it all documented. So yeah, we're like 120 days out for the most part on some of our accounts.
Yep. Yeah. And that's when the renewal process starts is
Hmm.
120. But obviously, during the course of the year, you're having those client conversations. You're doing things like auditing the experience mods, auditing the claims,
Hmm.
open claims, getting things closed out, and again, communicating that to the client. Because if you're doing all those types of things, the client will know and appreciate that. Hey, you're working on their behalf, and it's not just presenting that renewal to them once a year. You have to be doing that. And again, how do you compete? How do you retain business during a softer market? Is making sure that you are doing those value added services, that you're visible during the year with your client. And guess what? If you're doing all those things and that client's getting bombarded by our competitors,
Hmm.
that client will stay with you versus, hey, you know what? I haven't heard from anyone. And, my broker hasn't told me about any of these things that this guy's telling me. Again, if that's the case, then it's a little bit of shame on you, but you won't be as successful as others in the business if that's the case.
Yep. 100%. What else do we want to cover on this soft market conversation here? I know we've gone through quite a bit already.
Yeah, I guess, we were talking with all that about how to aid existing clients.
Hmm.
I just wanted to share some of my thoughts on the prospecting side. So, because again, hard market, soft market will grow throughout either one, but you definitely have to change the ways that you're prospecting. And I think that every market's a great market for growth. It's just a matter of what is your messaging related to that. So
Hmm.
on the prospecting side, if you're out there talking to prospects and just saying, hey, what's your current broker sharing with you about the market cycle? And again, asking those questions that we're doing with our clients and finding out. And if they're not hearing that information from their current broker, call it a more lazier incumbent broker, you know what? That door is opening for you to come in now and start quoting that account. So get out to them 6 months before they renew. Start talking to them. Hey, what's your renewal strategy this year? The market's changed, and find out, if someone, varying degree of, if we can become the broker of record through winning their trust during this process and auditing policies and doing all the things we normally do. That's awesome. If you have someone though that's reluctant to make you the broker, just find one market that you'll write with, and you've talked to that market and you've identified that this is a risk that they want to heavily pursue,
Mhm.
and ask that client, say, okay, great. You like your incumbent broker. I respect that. That's wonderful. How about this for our renewal strategy? You give me one market, just this one market. It's the only one I want. Why would you do this? You're going to get a much better renewal when your incumbent broker knows that, hey, someone else is out there poking around
Yep.
and actively quoting my business. I guarantee you they're going to work harder to retain your account than if we weren't. And just make sure that with that client that you have the conversation that, I'm here not just to do this and just do this work, but I'm here to win your business. And I need your word that if I do my job here, if I do what I tell you I'm going to do, if I identify issues in your current program, if I bring to you a competitive fix for it, that you will move your business to me. You have to have that conversation. Otherwise, you're just going to do a bunch of work without as much success. And again, it's a great way, in my opinion, to prospect on winning new account. Other things you can do as a prospect is, controlling that narrative of giving that good communication. Why is it a soft market? What does a soft market mean? How can they use that to their advantage? If you're not explaining it, then the client's just going to come to their own assumptions on why the premiums go up one year, down another year. And again, not a very favorable piece. Uh,
Mhm.
and let prospects know, just ask them, how has the past few years of your insurance buying been? Have you felt you've had kind of a take it or leave it? Well, now guess what? You have some options. And I'm here to help you, with those options. And, kind of the last thing is if you're, a broker that's been around for a little bit longer and maybe has gotten a little bit away from prospecting because the hard market's been good to you and your retention and your growth, you need to get out there and do this. Otherwise, you're going to see your book decline. It's all things that, again, create opportunity for us. We just have to make sure we're working smartly and working in a way that will help your clients, help yourself, and then help the companies that we're working with.
I will tell you too, just so in the small circle of brokers that I talk to that, outside of Falcon West even, a lot of them are tired. Like, they're just like, they're beat up through this market the last couple of years. It's been difficult to kind of like just to find traction, and a lot of them are younger, right? And kind of going through those first couple of years too. But I will tell you, there are also brokers who are just gonna kind of rest on their laurels and are gonna say, man, look, my book increased by, I got my premiums went up for, 20, 30%. My book grew, and they're not really pointing to the fact that anything changed other than premiums. And, to me, that's an opportunity for us to be a little more scrappy, and it takes grind. Like, that's one of the things, I've talked about is like, this job takes a lot of effort and time and just consistency, and really it is a grind. I can't There's no other way around it. And
100%.
so this is a great time to, take advantage of the fact that you have a good work ethic and you can get up on your feet after getting knocked down a couple of times and just keep going, because the last guy standing is the last guy that is probably doing the right thing for his clients, but at the same time, he's going to come out ahead in the long run too. So it's a lot of work, but it's, I think, at the end of the day, worth it and very, very rewarding.
Yep. A valuable grind. Absolutely.